Thank you everybody who stayed around all day to wait to hear CapEx Ventures. I appreciate it. I know I have a short time, so I'm going to get right into the presentation. I just need everybody here to read every single word here. Okay, you got it? Great. Through this presentation, I'm going to explain CapEx Ventures, why we think we're sitting on something pretty special. We have a great management team led by our CEO, Francois Laurent. Anybody here who may remember Consolidated Thompson, one of the most successful mining stories in Canada in the last 20 years? Francois was the CFO for Consolidated Thompson. He was there through all the key components of development as well, right up until the point it was sold to Cliffs for almost $5 billion. We're situated in the right position, in the right area, the Labrador Trough. I personally feel it's one of the most valuable iron ore jurisdictions in the world. And if you want to know why, I'll talk to you outside because it's an explanation that long. We're in a very optimum spot within this trough, and when I think we're going to be proving up one of the biggest resources in the Labrador Trough. We have 5 main properties, 2 of which we are focusing on in 2012. The jewel of our properties, of course, is what we refer to as Block 103. It's largely a magnetite property, and I'm going to explain why that is so special with respect to the rest of the trough. Existing infrastructure. Block 103 is within 30 kilometers of an existing railway. In 2011, CapEx drilled approximately 6,000 meters in Block 103. When the information hit the market, it was quickly realized the potential for this area. In 2012, we're going to go back into Block 103, and we're going to drill 15 to 20,000 meters. It's going to be a busy 2012, because not only are we going to drill those 15,000 meters, by the end of 2012, we expect to publish our maiden resource. And we're very, very confident that we're going to publish one of the largest maiden resources in the trough. We are also going to commence engineering to help develop this property to the point that we're going to release our PEA by the end of the first quarter of 2013. I mentioned there's 2 properties we're focusing on. We also have a hematite property, referred to as Redmond, that we believe could be a near-term operation. I'm not going to call it DSO, as you may have understood the DSO operations from New Millennium and Labrador Iron Mines. I'm not going to call it DSO because it won't be grading over 50% iron, but we feel this deposit, I call it deposit, well, this area was mined by the Iron Ore Company of Canada before they left Schefferville in 1982. It's a hematite that we feel we can produce a concentrate grade to deliver 1 to 2 million tons a year in the near term. So again, a busy year. Labrador Trough. For those of you who don't know the trough, it is 1,400 kilometers long, iron ore belt, running from Quebec up through western and northwestern Labrador to far reaches of northern Quebec. It's been mined since 1954. Our properties are very close to the Schefferville area. There is a rail line going into Schefferville that was used since 1954 by the Iron Ore Company of Canada until they ceased operations in 1982. It's currently being used by Labrador Iron Mines and going to be used by New Millennium when they commence their DSO operations. Lots of information on infrastructure in the area. You may have heard New Millennium and Tata's commitment, hopefully by the end of this year, to commit $5 billion to the development of that property. I'm going to show you why that's important for us. There's also the Plan Nord, the $80 billion Plan Nord. The epicenter of Plan Nord is the Schefferville area, Block 103. You see Block 103 is this area circled around in red. It is 18 kilometers long by 7 kilometers wide. Even if you didn't know very much about the geology in the trough, even if you didn't understand exactly where all the iron ore is. If you look to our southwest, you see New Millennium's LabMeg, 5.7 billion tons. To our north, New Millennium's KMeg, 3.5 billion tons. If you're going to go looking for iron ore, that's not a bad place to start. We have two main zones that we're currently exploring. One we call the Greenbush Zone, and the other the Northwest Zone. The Greenbush Zone, why do we start there? Well, once you did a narrow magnetic survey, of course the pink represents a magnetic signature. We've seen a big, strong magnetic signature in that area. So obviously, that's a good place to start drilling. And we are very successful. On every drill hole, hitting mineralization with thicknesses ranging from 90 to 260 meters, averaging over 110 meters. Now, in 2011, the drills only went to a depth of 200 meters from surface. Most published resources in the Labrador Trough go down as deep as 400 meters. You see the circles represent the drill holes. The triangles represent those drill holes that we have not released the information from yet. The orange circles indicate that they're open at depth, meaning we are still in mineralization, but we stopped drilling at 200 meters. So when we state our average thickness of 110, we really don't know what those thicknesses are. Understanding the geology of the area, the folding potential, and of course, the limitations from a magnetic survey as well, we also decided to drill in what we refer to as the Northwest Zone. We put 6 holes in this area. All 6 holes intercepted mineralization, with average thicknesses from 90 to 148 meters. I mentioned we're in a good spot. This is a magnetite deposit. I firmly believe that magnetite is the future for the steel industry, future for the iron ore industry. And that is a big explanation too. I'm willing to explain it outside after the presentation. Bottom line, when we upgrade this concentrate, we can reach iron grades of 68%. Those of you who look at iron today on the spot price, it's indexed at 62%. There'll be a premium attached to such a high quality product. Besides the premium, I think it's very valuable from the perspective of the cleanliness of this ore. Very, very low manganese, no phosphorus, no sulfur. One of the world's lowest alumina. Everything that is getting bad in Australia in terms of lower iron, higher impurities, this can solve because it has higher iron and no impurities. New Millennium, there are 2 big deposits. In fact, I referenced the 6 holes that we drilled in our Northwest Zone. New Millennium has also done some drilling close by in those pink holes with similar results. In fact, in their latest news releases, they're stating they believe KMeg, LabMeg are part of one continuous mineralization. That's great because it runs right through Block 103. This supports our case that we're sitting on one of the great deposits, future deposits in the Labrador Trough. Redmond. Redmond is in the Schefferville area. In fact, if you look at the railway, it runs right through the deposit practically. I'm not going to talk about Porky Lake, Snellgrove, or Loch Connolly today because they're focused for future years, not in 2012. Again, Redmond, our plan in 2012 is to do an additional 5,000 meters in this area. Continue on with our metallurgical test program that's going to demonstrate that we can produce a saleable concentrate very simply with gravity separation, and near term, because of its access to infrastructure, the fact that it had been mined before, and all the great news you hear about the ports and Setil and the upgrades and so on, only supports our confidence that we can bring this to market within a 3-year period. And here's the real story of the opportunity today. When you look at the peer comparisons, CapEx is sitting somewhere, or Lester Cash, somewhere around a $50 million market cap. The peers that we are compared on this table, for the most part, what's the difference? They have a published resource. They have a PEA. Most of them are working on their bankable feasibility study. So the key difference is a resource and some engineering done at the PEA level. Within 1 year, that's exactly where we're going to be. So there's no reason to expect that we wouldn't be at this market cap level. In fact, because we're coming behind these companies, we're learning from their experience. They're 18 months ahead of us right now. We expect within a year we'll catch up to them. They'll only be 8 months ahead of us. Great time for CapEx. I know my time is short. I'll be available after this presentation to talk to you outside. Thank you very much.